Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live. Welcome to the Tokenmetrics Thursday live stream. I'm your host, Bill Noble, joined by my colleagues Forrest and Mehdi. Gentlemen, welcome.
Hey, Bill.
Hi, Bill.
Glad to be on.
If you need a roadmap in crypto and you need to make money in crypto and you want to hear or need help from professional analysts like Forrest, Mehdi, and myself, then for goodness sakes, like and subscribe to this channel. Our show today is brought to you by tokenmetrics.com. If you want a dashboard, you want artificial intelligence, the deluxe research written by Forrest, Mehdi, and our crew, then head on over there and subscribe and get the best research in the business. All right, let me just take a second to welcome some people on the stream. Silent Sandal, King T, MMK, 56, Tugay, Bobby Walsh from London, guys dialing in. We appreciate you over there overseas. Okay, with the intros done, let me turn it over to Forrest for the agenda for the stream.
All right. Before I jump into the agenda, guys, make sure you are hitting the like button. Make sure you're hitting the share button, tweeting this out on Twitter or any other social media you might have. I've already done so. All right. I'll share my screen here and we'll jump into the slides. Tokenmetrics live stream, AVAX Avalanche Santa Rally. AVAX is already up quite a bit, well over $100. ETH up only, Web 3.0, Tokenmetrics Live. Guys, look at the bottom left-hand corner. We've got all of our social media down here. If you don't follow us on these social media platforms and you want to, definitely go and do so. All right, guys. Subscribe today at tokenmetrics.com. Tokenmetrics is a phenomenal AI and machine learning dashboard for finding very, very phenomenal cryptocurrency opportunities. All right. Tokenmetrics live agenda, Tokenmetrics updates. We'll walk through that in just a minute. Then Bill's going to hit you with the legendary market update. I'm going to talk about some key entry levels just in case you missed the entry levels that we talked about last week and the ones that we've been talking about on Crypto Foresights. And then Mehdi's going to come in and give a primer on layer 0, specifically talking about Cosmos and the Atom token on Cosmos, and talk about why he's pretty bullish on that ecosystem in the long term. I am as well. We'll have Crypto Showdown, and then we'll have a little Q&A. If you want to, before we get into the Menti code, Bill and I participated on behalf of Tokenmetrics in a trading battle. It's this really cool thing. You can go back and watch it on our YouTube channel or on the Trading Battles YouTube channel. But basically, we had an hour to put in some trades for the following 5 days, and we had $10,000, and it was just a play account. But the winner, their P&L got donated to St. Jude Children's Hospital. So Bill just destroyed me. Doubled. I don't know many people that can double their account in 4 or 5 days. So Bill made $10,000 in that account, which got donated to St. Jude Children's Hospital. So absolutely incredible performance. I don't know. That is actually the highest. The most money made and most money donated of anyone on the trading battle history. So huge shout out to Bill, and just know that's the guy that's about to give you the market update. If you want to participate in with this live stream and engage with this live stream, go to www.menti.com and use the code 88495489. That's going to be for participating in the Q&A, and it's also going to be for participating and casting your vote in Crypto Showdown. Speaking of Crypto Showdown, we'll reveal the results later. We haven't given you guys a chance to vote yet, but throughout the live stream, head over to www.menti.com and use the code that you see above. It's also in the description below. To talk about what's your top altcoin pick right now. I know a lot of people were just kind of playing it safe, kind of in stable coins, might have been in ETH, might have been in Bitcoin. we're seeing layer ones really take off. Avalanche is leading the charge, but the question is Avalanche already gone and you need to maybe, look at Terra Luna or Near Protocol? What's your pick for the top altcoin or layer one to be in for December? Now, without further ado, Bill's going to take it away with the market update.
All right. Let's rock the market update. Thank you, Forrest. Patrick, definitely crypto gamer, definitely appreciate the love out there. Thank you for all the nice things that you say. Okay, market update. What's next? Oh, you know what? Being bearish is so exhausting. I'm glad I can finally be done with that. And now we talk about what's next. Stocks. Well, thank God we don't have to worry about stocks crashing, at least today, because the S&P decided to make a new high. Nothing like bad news to get stocks rallying. Those guys are unbelievable. Okay, so that's good for crypto stability in the near term. Now, let's talk about an intricate part of the stock market. Yesterday, the S&P made new highs, but the total number of NASDAQ new lows. So NASDAQ is like a broad universe of tech and small caps. There was a record number of stocks in the NASDAQ making a new low on the same day the S&P made a new high. Or in crypto terms, Bitcoin and Ethereum went up while altcoins went down. So here's what it looks like in equities. S&P making a new high and NASDAQ stocks making massive new lows. Now, what does that mean? Well, it means that tech stocks, some of them are beat up down 70 or 80%. So either S&P is going to go down or speculative assets have a shot at a comeback. And where do you want to be long speculative assets? Stocks or crypto? You can do stocks, but crypto is better. Check it out. Dollar index tried to rally yesterday. Dollar coming off. Red candles in the dollar is good for crypto. Hopefully it keeps up. So over watching the dollar go up. Such an idiotic contrarian move. Hopefully that is over. Now let's talk about Bitcoin. In the middle of December in 2019, that was the bottom. Naturally there was a disruption from the pandemic, but, Bitcoin went from 6,400 to over 10K in about 2 months. Mid-December was also a bottom in 2018. So that rally took a little longer to get started, but a lot of times tax loss selling in crypto may run its course and be done by mid-December. Okay, another note that Bitcoin was just below its 21-day moving average. That's the green line. Okay, and December 12th, 2020, Bitcoin took off. So what am I trying to tell you? Well, mid-December is a good time for Bitcoin and crypto to bottom. And when there is a Santa rally, it can kind of be up only. So if there's no equity market disruption or, the Fed decision hasn't wrecked the world, which so far it hasn't, crypto has a legitimate shot at doing the following. 1, leading a recovery in speculative assets. And 2, it has a legitimate shot at becoming the new tech asset. In other words, yes, investing in a destroyed NASDAQ stock may be a good idea, but isn't investing in Ethereum and Avalanche a much better idea? Well, naturally, this is a biased crowd, but we're more in favor of crypto. If something's going up in the world, if there's an asset class that can rally between now and, say, the end of January, yeah, we're biased, but it's got to be crypto. So let's take a look at Bitcoin. And the way I'm going to look at this is I'm going to start using the 21-day moving average. 21-day moving average is used by, mechanized speculators, or at least it used to be. It's a pretty good indicator of market momentum. So this is the Bitcoin futures contract. In the bottom left, you see in July when, Bitcoin was below the average, and when it popped above it, it rallied. The same was true back in October, right? They kind of pushed it below the 21-day moving average for a while. And then when it came back above it, it really rallied. So Bitcoin now hanging out around 49. It's got a long way to go until it gets to its 21-day moving average. So 2 takeaways. One, if you're going to give me this, oh my God, I missed it because I didn't buy the low, I would encourage you to shift that thinking. Also, Bitcoin may sit still. Bitcoin's got a lot of work to do, but that could be good for altcoins. So if it takes Bitcoin a while to chug up to 53, that could be layer one's chance to really shine. Then if Bitcoin does get above 53, that could lead to legacy investors coming in January and getting long as everybody allocates 2% of their portfolio to that Bitcoin ETF everyone used to talk about. Now let's go to Ethereum. So there's an idea out there that, okay, well, I screwed up. I missed Ethereum at 3,600. No, you didn't. No, you didn't. Nobody except, I don't know, trading legends like Forrest were going to, buy the absolute low in Ethereum prior to the Fed meeting, right? Everybody else can just say, all right, well, Ethereum's at 4K and Ethereum's been at 4K for, I don't know, 3 months, 2 months. So if Ethereum gets above 4,200, that could be a signal that it's above its 21-day moving average. It's done faking people out and it's ready to go, right? I mean, all it takes is, one good day and crypto breaks out. So in the meantime, what do? Well, you try and buy whatever dip you can. I think the fact that it's a relatively quiet day is bullish. In other words, a little bit of hesitation, a little bit of fear, the markets climb the wall of worry is a good thing. You don't want to see Ethereum up 30% in one day necessarily. That could be a bear market rally, right? You want to see it build up slowly and then accelerate. So the fact that it's hesitating, the fact that you may get a dip over, say, the next 3 days or even, kind of like these Christmas or holiday flushes that the market likes to do, there's going to be an opportunity to get ready for like the Santa rally in Ethereum. Okay, AVAX. All right, so Avalanche, if you're watching your screens, Avalanche was up 10% before the Fed. Obviously, smart money, big money is coming after this. Every time Avalanche crosses its 21-day moving average, the last time it went from 60 to 150. Okay, Avalanche in 2021 could do what Ethereum did in 2017, which is go on a massive parabolic rampage, right? It's as simple as that. My colleagues are telling me that games, metaverse, DeFi is all being built rapidly on Avalanche. And it's a good way to capture a lot of the value. The Time Wonderland treasury is filled with Avalanche tokens, right? So Avalanche is quickly becoming like, I don't know, I guess Ethereum 2.0 or Ethereum's twin in the layer one universe. And with the way this thing can move, there may be very limited dips. And if AVAX moves today, the way ETH moved in 2017, this could be a 1x, 2x, or 5x, not investment advice. The bottom line is smart, big people are probably buying this. And if there's going to be a rally in crypto, this is the leadership coin along with Ethereum. Now, we're going to talk more about layer ones. Mehdi's going to help us with layer 0, which is Web 3.0. Layer ones and Web 3.0, if the crypto market continues to go up, those will probably be the leaders along with Metaverse. So Phantom, again, a layer 1, okay, gets close to support at $1.15. 21-day moving average is still very far away at 171. And the last time Phantom took out or got above its 21-day moving average, it basically went from 1.5 to 3. So as these things develop, I can see Phantom, AVAX, Ethereum all following in the footsteps of like a Santa rally or a breakout. Now, it looks like Avalanche is going to overtake Solana in terms of the narrative. But if Solana takes out its 21-day moving average at 191, it's going to invalidate a bearish formation, which is bullish, net. Okay. And Solana can definitely attack 280 if it's above 191. Now, will Solana be the best performing layer one? I don't know. It looks like everyone's getting so excited about Avalanche that a lot of people who are long Solana may have to switch to Avalanche to catch the price performance. So I do think Solana is going to be involved in the rally. Okay. But again, people were really bullish Solana, and it looks like Avalanche could come out of nowhere, kind of like a horse in a horse race, going from like 5th place to 1st place in the final stretch. But Solana above 191 implies 280. Cardano. All right. If layer one solutions as a basket, right? You know, if layer ones, right, which is like Cardano, ETH, Solana, right, AVAX, Phantom, even KDA, right? All these coins could become the next FANG, the next Facebook, Apple, Amazon, Netflix, and Google. They could become the massive blue chips of the technology side of crypto. So if that's the case, you know, with retail washed out of Cardano on a move from $3 to $1.20, I'm really not opposed to taking a shot in Cardano here, because I think if Avalanche leads, all these layer ones are going to go up, right? This is the future of the internet. All of this stuff combined with Polkadot and Cosmos is going to form the backbone of like worldwide technology. Polkadot, on the subject of layer zero, sitting at the 62% retracement, just like October, around $25. The 21-day moving average is all the way up at 30. So Polkadot, you could say, has work to do, or you could say Polkadot has a lot of upside to get to a level where it could break out. So if Polkadot hesitates and sits here, that could be an opportunity to grab some, because this interoperability narrative, which people, you know, they get really into it and then they get really out of it. I think people need to realize that Web 3.0, this layer one trade, metaverse, you know, the world on the blockchain is the next big thing. The next big thing is people switching from NASDAQ to crypto. It's not necessarily a decoupling, but this narrative of where am I going to generate returns, right? Where's the money? Yeah, okay, yeah. 3/4 of NASDAQ can come back, right? That can happen. Or, you know, NASDAQ could rally to a certain degree, right? But crypto could just completely outpace. Matic, okay, on more evidence that, you know, layer one and layer two solutions are becoming the future of technology and the internet and finance and gaming, et cetera, right? Matic holds, our AI loves it. It's above its 21-day moving average. Yeah, it's not the fastest moving thing in the world, but it never went down really during the decline, right? There was no blowout decline in Matic. And I think that's telling. That's telling for the next leg of the rally. So if dips appear, right, I think dips are opportunities, not investment advice. Fear and hesitation is an opportunity, right? It can't be easy. If it's easy, it's wrong. So if you look at the market and you're like, oh, this is scary, or equities come off in 2 days, or Bitcoin goes down, you know, 2 or 3 days from now, I view that as an opportunity. Okay, just to drive an interesting point home, Monero completely destroyed Privacy Coin back to where it was in July, Monero's at 189. The 21-day moving average is at 210. All right. So this is an example of how destroyed certain parts of crypto are. Just like I was talking about NASDAQ, there are whole components of the crypto market that I've just been wiped out, right? So, I mean, Monero or any other coin at either its July or October low, buy it or sell it. Okay, OKB, our AI picking up on this. This is an example of what may happen in the rest of the market, right? Choppy, 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 knifing through the 21-day moving average. Yes, there have been fake outs here before, okay, but this is a good example of the kind of burst you can get once coins recover above their 21-day moving average after an extended correction. Okay, Phantasma. I don't know if I said that right. SOL is the ticker symbol. Above 221, okay, is good support. It's been hanging out down there, really doing a hard consolidation. What happens, okay, if the whole NFT gaming and metaverse trade takes off? This thing recovers above its 21-day moving average at 260. Okay, the next thing you know, SOL may take the whole gaming and metaverse and NFT sector with it. Same thing with Sandbox. I mean, oh my God, Sandbox has a long way to go. It's at 519. The 21-day is at 580, right? It just hit support around 4. And I know Sandbox is considered a big cap metaverse, but I just was talking to a friend of mine who's in equities, and he says, yeah, when we do small caps, we like looking at, you know, small stocks that are like 9 billion in market cap, right? Which is funny because, you know, in our world, 9 billion in metaverse, it's like, wow, that's humongous. That's almost overvalued. But when you look at it in equities, 9 billion is small cap, right? So if Sandbox is digital real estate, if the fear trade has kind of come and hopefully gone, then why not try to buy dips in Sandbox, not investment advice, right? I mean, where's Sandbox going to be if AVAX is at 600? Let me just let you think about that for a second, right? Axia, kind of a new cryptocurrency, never went down. Our AI is on this in the Qcoin indices, just never moved, went sideways. Every dip got bought. Next upside level on charts is 435. There's always a bull market somewhere. Now, I know that's Cramer's famous saying. Big Cramer fan. It's a lot harder than you think to do content every day. So much respect for him. One of the lessons for crypto, okay, on this idea of there's always a bull market somewhere, that's why you got to subscribe to tokenmetrics.com. Because we'd be happy to give you all the best coverage we can here on this YouTube channel, right? Please hit the like button. But on tokenmetrics.com, that's where the hidden gems are. That's where the research is. That's where the next thing is being flagged by an artificial intelligence system. Speaking of intelligence, Forrest was all over Terra Luna, right? All over it. Okay, this could be a winner-take-all play in DeFi. Right? Honestly, Luna went down to a prior ceiling at 54. It acted as support. It tested it twice. Brutal price action, but it comes back. And it's coming back above its 21-day moving average at 61. And it just honestly, if AVAX and Luna and maybe ETH are like the winner take all, that's where all the value of DeFi and gaming and metaverse is captured by a handful of coins, just like in equities, where a handful of equities captured 10 trillion in market cap. I mean, when you think about the numbers in stocks and you say, oh, well, I missed it in Luna, it was at 54 and now it's at 64. So I can't get involved. Oh, please, people, please. All right. So it's not investment advice, but the coins that are going to win are going to go up way more than you think. So unless there's a crash brewing that I don't know about, upside in crypto is bigger than upside in other asset classes. Okay, KDA. Okay, been following this, track the support point at 9.5. Somebody somewhere on social media told me to shut up about this, right? I know it's gone from $1 to 25, but look at what happens when these things bounce off support. Look at how this thing approached its 21-day moving average. This thing went from 9.5 to 13 on a rope. So I think stuff like this and these smaller cap layer ones, right? There's a lot of value to get unlocked here. That's what KDA is telling you. Oh, by the way, did I tell you that on tokenmetrics.com, you can search rankings for smart contract platforms? So if smaller layer ones like KDA start popping up, you can get in early. Layer ones are going to capture value. They are the new FANG. RMRK, okay, something we like on a fundamental basis. Okay, it's hanging out around its 21-day moving average. That's just fine with me. Compared to the rest of the metaverse, RMRK outperformed, so it may start slowly again. But again, this is like 400 million market cap versus 9 billion for other ones. So again, is metaverse dead? Hardly, right? I picked up my phone the other day to use WhatsApp, and at the bottom it says powered by Meta with the new logo. Facebook news flow alone, right? In other words, Facebook is not going to change its name to Meta and then not announce its metaverse progress. So as Facebook gets involved, as the rest of FANG gets involved, how does that not pump the decentralized metaverse? Now, it may not be every coin, right? But there's got to be opportunities, both in coins like this and in ones that you would find in rankings on tokenmetrics.com. Decentraland, okay, trying to get back above a key level at $3.30. But check it out, folks. The 21-day moving average is all the way up at 4. So, I mean, if everyone wakes up and goes, oh, man, I got to get involved in the metaverse. I mean, I missed the first leg. I missed $1 to $6. I'm not going to miss $4 to $10. Because, again, all it takes is 1 or 2 Facebook announcements for this to get going. Now, if I'm wrong, I don't know. What do? You put your stop below the recent lows? In other words, if you look at this chart and you think about risk reward in Decentraland, okay, maybe it's not the super sexy metaverse play, but it certainly is more, I don't know, intriguing than Facebook, right? And from a risk reward point of view, you can get involved with a reasonable stock and this thing could go up 100% or 200%. So not investment advice, but I mean, if there's kind of an up-only move in crypto, as everyone realizes that crypto is the new king of asset classes, what's going to happen to these metaverse coins? Okay, Polymath or Polymesh, right? Security tokens, okay? Traded at a cent, went to $1.30 on a Coinbase listing, recently destroyed to 46 cents. Okay, what happens if you can tokenize bonds? What happens if you can tokenize real estate? What happens when an investment bank comes out and says, we're going to get into crypto by making markets in security tokens? Okay, I watched this, I let them kill it. And now I'm like, narratives for 2022, right? Web 3.0, layer 0. Layer 1s as a whole becoming the new FANG. Security tokens, NFTs and advertising as billboards in the metaverse, etc. Speaking of layer 0, okay, Cosmos in August was at 8, woke up, went to 44, and then gave back half those gains at 20, and now it just sits there. So later on, we're going to hear some cool stuff, and I'm going to chat with Mehdi on Cosmos, on this idea of Web 3.0, of blockchains connecting to each other. And again, what is the infrastructure of the new internet? Back in 2000, internet infrastructure, Dell, Intel, Cisco, Microsoft, forget it. It was just, it was like a wealth creating machine. No one is talking about this. And when is the best time to talk about it? With professional analysts on this channel. Hit the like button. Okay. When no one's talking about it. Talk about it when no one's talking about it. That's the time to talk about it. Okay. Elrond. Notice down, hits a big fib number, runs a couple stops, does a huge spike, and check out what happens. Check out the approach to the green line. That's the 21-day moving average. So when these things wake up and they're like, hey, we want to go back to the 21-day moving average and we want to go through it, look at how it trades. So Elrond, KDA, possible leading indicators of what's next. Because, man, when these things move, they really go. Speaking of going, remember how crypto.com was going and then everybody forgot about it? It went from 20 cents to 90. Everyone thought it was going to $1. It went back to 55 cents. Everybody gave up on it. It couldn't even get to the 62% retracement. Now, a key level is 55, and the 21-day is at 62 cents. So the point is, stuff that was going up that turned around and corrected off a Fed fear trade that really isn't a fear trade anymore, right? We know where the Fed stands. We know they're going to do something about inflation, but if that doesn't wreck the whole world, then crypto can become the king of asset classes. And if crypto is the king of asset classes, where's crypto.com, Coinbase, Galaxy Digital? Where are those things going to be trading in 3 months? Okay, helium, right? Every time helium loses half its value, it's traditionally been a decent buy, right? It went from 20 to 10. I remember Forrest on the live stream saying, yeah, I bought it at 10. I think it went to 60. It goes to 60, and then it comes back to 30. And checky, what happens, right? They run the stops below a big chart point, right? And then how does it come back when it goes back to the 21-day moving average, right? Once it gets up to steam, it just goes vertical to the 21-day, then probably consolidates, then eventually, most likely, goes back to 61. Because one of the things about helium is it is a part of the infrastructure of the new internet. And it's telling you how cryptos can behave. So if there's a rally, which we hope, of course, right? How's it going to rally, right? How's it going to move when it moves, if it moves? Okay, GNO, another example of run the stops, look terrible, come back above the 21-day moving average with a vengeance. All right, folks, you get the idea. The 21-day moving average is important, okay? Crypto could become the new king of asset classes. Consider buying on dips. Think about risk reward. Use stops. But, barring some incident that I don't know about, it's time for the holidays. It's time to be constructive on crypto, okay? Even if that means you have to live through any potential scary dip. And that is the market update. Forrest, back over to you, man.
Thanks, Bill. Yeah, so I'm going to jump into just some very basic entry point strategies for crypto. And I'm just going to kind of outline my portfolio strategy as a whole, because I think it keeps people like this dip, though in total cryptocurrency market cap, it was only about 33%. I'm already hearing a lot of horror stories of people that that like sold the bottom. They got afraid. They were like, this is potentially going to be in a bear market. And guys, we're not out of the woods yet. I'm perpetually bullish on crypto. I want to be as exposed to crypto as possible in the long run. I plan on being in crypto for a long time. This could just be a bounce, and we could certainly come back down to this trend line. And that would wash out a lot of people from crypto, and it would wash out a lot of people's portfolios, and it would be very unfortunate. I don't think that's going to happen. I don't want to scare anybody, but I'm just already hearing so many stories of people that this dip just completely washed them out. They moved their entire portfolio into stable coins, or like 60, 70% of their portfolio into stable coins. And then didn't buy the dip at all, or they moved it into the stable coins at the bottom of this dip. And I want to just share with you guys a strategy that I personally use. And now keep in mind, this isn't going to be right for everybody, and this is by no means financial advice. But personally, you're allowed to have multiple portfolios. Like you don't have to put everything under the same strategy. You can have and execute multiple strategies, right? So over here on the left, the bulk of my portfolio is in kind of a long-term value investing HODL portfolio where, yes, if we get overextended, I'll look to trim a little bit and add back on dips. But overall, I'm never going to be just selling off 70, 80, 90% of my HODL portfolio. I'm just not. I want this exposure to the fastest growing asset class in the space. And as long as I'm investing in good projects, I know that they're going to bounce back. Now, if I was invested in a rank 600 by market cap, $15 million market cap, like meme coin, yeah, I would be very, very scared, and I wouldn't want to be holding on to that in this dip. But guess what? I'm not investing in those projects. So the bulk of my portfolio is going to be over here where it's going to take a lot more than a 33% correction to get me out, to shake me out, right? By the way, guys, just while we're on the topic of a 33% correction, a good bull market, or any bull market with a parabolic rally in it, is going to try its best to shake you out. Look here back in 2013. 50% dip before going parabolic. Look here in 2017, 47% dip, followed by, within a few weeks later, a 45% dip, followed by going parabolic, right? So it would seem that before you can get a parabolic rally, it's gonna shake people out. You're going to get the 30, 40, 50% dips before a parabolic rally. So if anything, this is actually a healthy sign that we have potential for a parabolic rally. Am I saying it's going to happen, that we're going to get a parabolic rally? No, but the market certain circumstances are certainly pointing towards the possibility of a parabolic rally, right? I've talked about in the past where you get these bunches of just really solid growth green candles, and then you go parabolic, right? And then we get these corrections, and you get these really solid growth of green candles on the weekly chart, and then you go parabolic, and you get 5, 6, 7 small weekly candles in a row, and then you go parabolic, right? We're getting these bunches of weekly candles on total cryptocurrency market cap. We're getting our 30, 40% corrections, right? We absolutely could see a parabolic move. And I don't know about you, but I want to be as exposed to projects, or as exposed to crypto as possible if we see a parabolic move. In fact, I want to capture that parabolic move so bad, I'm more than willing to sit through a dip to the bottom of this trend line and watch my portfolio just drop 70, 80% just for the chance of this parabolic rally, right? That's the name of the game in crypto. The people that don't get that, the people that value invest and don't get shaken out, get to participate in these parabolic rallies. If you sell down here, right? If you sell down here, you don't get to participate in the parabolic rally, or you have to buy back at a more expensive price, which is very unfortunate, because then you get less gains in the parabolic rally. And you're also probably more likely to be the type of person that's not selling up here, or not trimming their portfolio up there. Now, the other strategy is to section off some money that I am willing to trade, that I am willing to move in and out of the market with. And it's not going to be anywhere close to 50, 60, 70, 80% of my portfolio. I'm never going to take my entire portfolio and move it to stable coins, right? But I've heard stories of people that have been doing that recently in this dip because they just want to move completely into stable coins. And to me, it just doesn't make sense to move 100% into stable coins after the market's already down 30%, because you're not getting as much for your crypto as you could have if you sold up here, right? If you want to be moving into stable coins, you want to be doing it towards these peaks, right? But my other strategy is trading, right? And you don't have to be a day trader. You don't have to be an expert in technical analysis. You can tune into to Crypto Foresights. You can use the Token Metrics dashboard to trade, right? And have a decent little trading strategy. You don't have to be an expert. As long as you have decent risk management skills and you're not taking your entire trading portfolio and going all in on one trade, you're going to be fine. You're going to be completely fine more often than not. Of course, not financial advice. So with that in mind, right? With that in mind, let's talk about some potential entry points in case you did miss the dip, in case you didn't buy the dip and you're wondering, all right, where do I get back in? Well, two things we want to be looking for, right? If we missed the dip, and I'm almost always going to be trying to buy these dips, right? Buy the bottom. If you miss the bottom, two reversal patterns I want to be looking for: reverse head and shoulders, bump and run. Two of the easiest patterns to spot, especially bump and run. Bump and run pattern, you could see AVAX did it perfectly. AVAX, this was a bump and run. You had your downtrend line. Your downtrend line was established here, right? Failed here. We broke through here. That's your first sign of a reversal. That is your first sign of a reversal that AVAX wants to go up. Then it's going to come back down and retest this downtrend line. If it finds support here, that is your confirmation that AVAX wants to go up. Is this a trading pattern that is 100% correct 100% of the time? No, but it's way more than 50% correct. And if you're looking to go long on good cryptocurrency projects, more often than not, it's going to be correct, right? Now, on the macro time frame, we have the same thing happening. We have our downtrend line. We broke it. That's a sign that AVAX wants to rip to the upside. AVAX wants to make new all-time highs. It's coming up. Oh, two red candles. Where's it going to come back down to? Probably down here. Now, if we were to zoom in on the hourly, we can actually see that we actually did. I'm going to clear this up so you can see it a little bit better. We already did kind of do a little mini bump and run here, right? But oftentimes you'll see it touch more than just once, right? So I would not be surprised if AVAX comes back down here to like the $100 level, and that could be a good entry point. That could absolutely be a good entry point. Now, do I want to just throw everything at AVAX at $100? No, that wouldn't make any sense, right? I want to take a decent sized position with plenty of upside, but I also have to understand what's my risk here. It's a lot higher than what it was if you'd have bought down here at $76, right? So there's still some risk here, and I might want to throw in a stop loss on that trade. Let's talk about Bitcoin here first. Bitcoin really not out of the woods yet, although I do think we are seeing a separation in altcoins from Bitcoin. In fact, I know so, because that's literally what's happening right now. We are literally seeing, like, this is not like I can't, you can't deny the charts. We are literally seeing altcoin dominance diverge, go up as Bitcoin's price goes down, right? So altcoins right now are, since the 20th of October, have been diverging away from Bitcoin. Bitcoin's dropping in price while altcoin dominance is going up. What does that mean? Well, historically, when this happens, if you look at past times when this happens, it's usually incredibly bullish, right? So the last time this really happened was in January of 2021, which kicked off a big parabolic rally in altcoins, right? So we had Bitcoin up here at 42K. It dropped all the way down to 29K. Meanwhile, altcoin dominance was rising, right? Bitcoin went up a little bit, rallied. Altcoin dominance leveled out before just completely going parabolic, right? So we talked about, and we've been talking about, let me get rid of this Bitcoin chart. What would happen if altcoin dominance broke out of this multi-month consolidation structure, right? We said it'll pop up above it, do a bump and run, come back down and test it as support, and hopefully move up into the 60% area, which would be very indicative of an alt season. So right now, honestly, the charts indicate alt season, right? Macroeconomics and what equities are doing may indicate otherwise, but the charts are indicating alt season. The charts are indicating that we are primed for a parabolic rally. Doesn't mean we're going to see it, but in the short term, I want to make sure that Bitcoin does get out of the woods, despite the fact that altcoins seem to be doing fine regardless. We are starting to see a little bit of a reverse head and shoulders pattern developing for Bitcoin. We have our left shoulder, our head, right? Our left shoulder out over here, our head, and our right shoulder could be developing if Bitcoin comes down, retests $47,000. Guys, Bitcoin comes down to retest $47,000. It's got to drop $1,600 from where it's at right now. This won't be comfortable. It won't. There's no such thing as the market being comfortable while Bitcoin and altcoins are dropping in price. But we expect this correction, and we expect this to be a solid entry point that also drives entry points for altcoins down. And then we hope that we break through and do a bump and run, right? We have our downtrend line. We want to break this head and shoulders neckline, find support on top of it. ETH, right? You feel like you got left out on ETH, could come back down and give you an entry point at about $3,900. Not guaranteed, but that would be the bump and run level, right? If it comes back down. Sandbox, we're looking for a reverse head and shoulders combined with a bump and run. And this head and shoulders could be drawn a little bit incorrectly. We don't know until it actually develops. We don't know if Sandbox is going to come up here first before creating the right shoulder, or if it's just going to slide down here. And this is as high as it's going to go, right? We don't know. However, what we can wait for, if you're looking to get an entry into Sandbox, is wait for this to come down and make support on the downtrend line. These downtrend lines aren't terribly difficult to draw. And yes, they are a little bit subjective. We could move this up and it would look like, oh, well, we haven't really broken yet, or we've barely broken. Look for something to pop up and come back down and give you an entry down here at around $4.90. Right? So just draw your downtrend line, look for the bump and run pattern. Luna already, this pattern's already played out. It's already played out. We had our bump and run. We have our downtrend line on the green. We came up and so we had a downtrend line established, right? Rejected, made support or found support on our exact price level that we talked about, $52.27. Literally gave you the best entry point possible for Luna. That was our margin pressure level, our 33% correction, 3x short level. Pops up above the trend line. This is a sign that Luna wants to go up, looking very bullish. Luna is an extremely strong layer one project. Find support once, find supports twice, find support 3 times. Runs, right? You can avoid FOMOing in, and not every cryptocurrency is going to give you multiple chances, but you can avoid FOMOing in knowing that a lot of projects are going to give you multiple chances. Let's look at, I want to look at, is it Algorand maybe, which is, I think, a good example if we can zoom out to the 4-hour chart. Look at the 3 chances you could have had in Algorand May, June, and July. These were all phenomenal entry points. And it wicked down to 68 cents and then popped all the way back up to $1.14. And you could have been like, oh, I'm going to FOMO in. I missed the entry. But then it came right back down to 66 cents. And it pops up to 94 cents. And you're like, oh, this thing's going back up. Bull market, back on. Let's go. Buy it at 92 cents. And then it comes right back down to 68 cents. Test this level 3 times, triple bottom, extremely bullish pattern. Extremely bullish when you get a triple bottom. You will likely have on a lot of altcoins multiple opportunities to get in. There's no reason to FOMO. Or if there's a cryptocurrency that's already gone, like Luna or AVAX, there's other layer one solutions that may not have had their patterns play out yet. Luna and AVAX have already ripped. They've already ripped, and you can find entry points on them if you look for bump and run patterns and look for good entry points and look for a pullback. Near protocol kind of ripped early on, but we're still kind of down here at this 882 level, right? We had our bump and run off of our downtrend line, right? Popped through, made support, came up, but look at the horizontal level that it's making support on, 882 but to 890, not around $9. What if it comes back down to $9? That's a phenomenal entry point in my opinion. Bitcoin looks like it could pull back down to 47K. If Bitcoin pulls back to set 47K, look for near protocol to pull back down to $8.80 or $9, this horizontal support level, right? That's already been building support on. That could be your entry point into near protocol before it moves. And this isn't guaranteed to happen, but before it moves to 1323 and hopefully makes new all-time highs. You don't have to FOMO in here at 982 when you're probably going to get another chance to get in at this support level, right? We'll do one more maybe. Solana already breaking its downtrend line and making support on top of it. On the 4 hour, it's already done this bump around. Now, if Bitcoin pulls back, if people start getting scared again, it could absolutely come back down to this level, $147, maybe do a double bottom down here. And if it does that, you just have to be prepared. You have to take what the market's going to give you, right? It may not give you this entry point, but if it does, you have to be willing and ready to actually take this entry point, right? We've got great horizontal support in previous resistance here, right? Great support and resistance here. This is a good entry point if the market gives it to you. If the market doesn't give it to you, you got to look elsewhere. All right, guys, I hope that was helpful. We are going to jump into Mehdi's segment here, who's going to talk about Atom and Cosmos.
Thank you, Forrest. Hi, everyone. How is everyone doing today? Before I jump into my presentation, I want everybody uh, to smash the like button. Our aim over here is to provide you quality content, and I'm surprised we haven't hit the 1 million mark. And I want you guys to help us get viral on YouTube, and help us with the YouTube algorithm. So you guys have to help me by smashing that like button. I know a lot of you guys are watching, and some of you guys are not smashing that like button. Anyways, before I jump in, I had few questions over here, so I'm gonna uh, try to answer those questions. There was one question by Digital Realm. He was asking what happened to Polkadot. You were bullish on Dot, now AVAX. I think it's a bit of a issue regarding market timing. We do remain constructive on the whole layer zero. In fact, the presentation today would be to explore layer zero. It's just the fact that at the moment market believes that a protocol which have features of layer one and layer zero together could be a viable option. Also, I believe that we are a bit early when it comes to crypto. So at the moment, the whole market cap of the whole crypto industry is 3 trillion. Not even 3 trillion. I think 2.6, 2.5 trillion. And Apple, just one stock, the yeah, so one stock is 3 trillion. So we're still very early, and if you want to kind of have one of those fang stock that does astronomical exponential returns of, let's say, 10,000 percent return, you need to have a diversified portfolio of long term winners. Another question I had was by Ling. He asked us, still feeling RMRK. It held up pretty well, and I'm thinking to add, yeah, RMRK is one of those NFT slash metaverses play which I'm very constructive on. If I were you, I wouldn't add a lot of percentage to my portfolio, maybe 1 or 2%. The only reason being that the token does not have utility, so we are kind of buying growth. At Token Metrics, we like to be value investors where we see execution and then add to our position. So I hope that kind of helps. That kind of adds more value. Uh, yeah. So today I'm going to be discussing layer zero. So I'm going to share my screen for you guys. Just bear with me for 1 second.
All right, while Mehdi pulls that up, just a reminder to everybody as to who Mehdi is and what he does. Mehdi has a background both in crypto, blockchain science, equities, and portfolio management. So Mehdi is going to help give you a key sector theme, and he's also going to show you how Web 3.0 can be built. Now, we're going to use Cosmos. We still like Polkadot, but I think this is something really important to pay attention to, because just like you needed to understand why the iPhone or why Netflix was going to be big, you need to understand what the future of the internet is. So Mehdi, take it away.
Thank you, Bill. Yeah, just to add on to that, I'm also doing a master's part time in cryptocurrency, digital currency, and blockchain. So yeah, I think I have a good grasp in terms of what future trend could look like, and one of the trends I think the market could start pricing it. Maybe not now, maybe after 6 months, maybe after 1 year, is layer zero. I believe layer zero is a very nice hedge to layer ones and also Ethereum, and also kind of seeing like I also worked in global macro research. One of the things I realized during my stint as a macro analyst is that market works in cycles, and market works in themes. So in crypto, I have felt like there are two things to make a lot of money. One is to either get into a project really early, but then obviously you get into a project really early, you also have the risk that you get into a project which is horrible, and then you lose your money. Now, the other way you can make a lot of money is to basically clinch onto one of the themes and let that theme run. So we saw that with layer one this year. We saw that with NFT. Ian is bullish that in 2022, the theme could be DAO. There are a few other themes that I like. One of the themes you mentioned was security token, Polymash, uh, and layer zero is also one of those. So before I kind of start an introduction of layer zero, I want to set some context. Uh, there is this trilemma in blockchain. Uh, this term trilemma, blockchain trilemma, was actually coined by Vitalik, right? So Vitalik basically proposes that any blockchain we have, whether it's private, public, blockchain has to decide what two features it wants the most. So you have decentralization, you have scalability, and you have security. So over here, as you can see, there are different blockchain that have selected different features. So if you talk about Ethereum, Ethereum's wanted to be more secure and decentralized blockchain, but it kind of gave up. Ethereum 2.0 kind of solves this, but eventually, but at the moment it gave up on scalability, and that's why you kind of see high gas prices. But then you also had some other blockchain like let's say iota focus was on scalability and decentralization. It kind of gave up on security. So my thesis is, for the long run, I think there will be multiple blockchain, and each blockchain that we'll see in this world going forward will be specialized in terms of one particular theme. So for example, at the moment you have Binance Smart Chain. Now, Binance Smart Chain kind of focuses on decentralization. No, no, it doesn't focuses on decentralization. It focuses on security and scalability, and that's why you kind of see within Binance Smart Chain, a lot of gaming projects are built. Similarly, on Solana, you also see a lot of gaming projects popping up, right? Because both Binance and Solana kind of decided the trade off they want to go for is basically scalability. We want to have a blockchain that is scalable so the gaming transactions can happen, high graphic games can deploy. Now, Ethereum, on the other hand, we can't see Ethereum being a popular chain for gaming at the moment. The reason is because let's say if you're playing game and you kill somebody and you get some coin, you got like 2 or 3 coins. If you want to sell those 2 or 3 coins, you have to pay 100x or 50x more gas fee. So it doesn't make sense, right? So so you have to decide what chain you want to specialize in, right? So Ethereum, I think, is one of the best chains when it comes to uh, DeFi, because of the high security feature and decentralization feature. You can be assured that what the transaction which are of billions of dollars, millions of dollars, are kind of secure. while I cannot have that security with Binance, because assume, let's say Binance secures a $1 trillion, just hypothetical number, $1 trillion worth of DeFi projects, DeFi TVL. Uh, there will be incentives among the 20 validator sets that, okay, you know what, we should corrupt the Binance smart chain and basically try to steal that 1 trillion mark. And it will make sense because Binance smart chain TVL, the valuation is about 100 billion, but the TVL is 1 trillion. So that's why for different blockchains you need different purposes. Now another theory I have is that this can work, this might not work, but I think, let's say if you kind of imagine that we are sitting in 2030, just imagine we are sitting in 2030. I feel like there will be millions, if not if not thousands of different blockchains, and each blockchain will be specialized for one purpose. And I also believe this thing called scalability is also kind of an illusion. If you think about it, if a blockchain becomes very popular, and the market cap of that blockchain increases significantly, the gas price will increase. So in my opinion, the scalability dilemma is also kind of mythical. I think blockchain can scale. Maybe it goes to 5,000, 10,000, but there has to be an upper limit. And I believe in a world where billions of transactions take place, I personally don't believe that one, two, three, four, five, maybe 10. I think 10 blockchain won't be enough. We need thousands, if not millions, of different blockchain. And guys, this is where layer zero comes in. So think of layer zero. I'm going to describe this diagram in a bit, but just think of layer zero as Ethereum. Like for example, you have Ethereum, and on Ethereum you have different applications building up. Just think of layer zero as a blockchain where different other blockchains are being built up. So think of Ethereum, but instead of on Ethereum, you have, let's say, SushiSwap or Uniswap. You have different big blockchains built on top of Ethereum. So that's how I would describe layer zero. Uh, so the way kind of Cosmos, this is a separate definition. Polkadot will have a separate definition, but in terms of Cosmos, what Cosmos does is through Tendermint BTF, it kind of gives everyone the ability to create their own consensus mechanism, and then it gives you a software developer pack where all these software developers, or anybody who wants to deploy their blockchain, can decide that my blockchain can have staking, it can have a on-chain or off-chain governance, it can have ability to communicate with other blockchain, it can have slashing. So as a developer, I can decide which features I want in my blockchain. Now I told you earlier, there is this dilemma, and every application will require different set of things. So gaming might require more scalability, DeFi will require more security. So every blockchain is unique. So let's say what Cosmos was able to do is give you this template, a modular template where everybody can come in and make their own blockchain. So Binance Smart Chain, for example, uh, it was built through Cosmos SDK, and they decided, okay, you know what, we just need 20 validator set. On the other hand, Terra Luna was also built on Cosmos SDK, and they said, you know what, we need 100 validator set. And because of this customizability in terms of making blockchain from scratch, you have brilliant projects launching on Cosmos ecosystem. So you have Terra Luna, you have Binance, you have crypto.com chain, you also had Thor chain, and you also have native projects like, let's say, Osmosis, Akash, and so on and so forth. So Cosmos did, I think, after Bitcoin and Ethereum, did the best service to the whole crypto industry by allowing us this modularity approach towards building do-yourself blockchain. So this is pretty cool. So once you have the blockchain ready, you have Cosmos Hub in the middle, and I mentioned earlier you have these different blockchains with different features. So let's say Osmosis, Thorchain, Terra, all of these blockchain are customized for specific feature. Like, okay, in case of Terra, I want more security. In terms of Osmosis, I also want more security. Thorchain, I want more security. With regards to Akash, I want more scalability since they're trying to disrupt cloud computing. So every blockchain will have specific feature, and some of the modules will be used. But one key theme this blockchain have between each other, and this is, I think, the essence of Web 3.0, and I think the next era of blockchain, and that's the reason why layer zeros are called Internet of Blockchain, is that one of the module is called inter blockchain communication. I'm going to repeat, IBC. So if you install this module and turn it on, all of these chains were firstly in silos. Now they can communicate with each other. So this dotted pink line shows you the layer through which these blockchains can communicate with each other. And this is, by the way, guys, because of Cosmos SDK module called IBC. So Cosmos Hub over here can allow these blockchains to communicate between each other, and Cosmos Hub. So you can think of all of these blockchains as city, and Cosmos Hub is the port city, you can imagine. So these are ships. These ships come over here, and Cosmos kind of texts them because it's in the middle. So that's how the architecture of Cosmos work. Now there is one caveat, and I think one of the issues is some of the developers do not care about blockchain. Let's say if I'm a businessman, I don't have the resources to maintain my own blockchain, or I do not want to get the headache of making my own blockchain. So I think that's one of the reason why I believe market sometimes underprices Cosmos and Polkadot, because sometimes market are hindsighted. So I think market at the moment is kind of hindsighted because they think it's a bit of an overkill. Developers wants to focus on business logic. So one of the best things AVAX and Ethereum does is that nobody has to create their own blockchain. Blockchain is there. You just deploy your application. So that's one of the reason I think at the moment Ethereum and AVAX and maybe Luna Terra, they're doing so well is because of this issue. But in the future, Cosmos is introducing this thing called shared staking, which in my opinion, will be a game changer for Cosmos. So what shared staking will do is give you more. Yeah, somebody said I forgot to mention about the Tendermint. Yeah, so Tendermint is the consensus mechanism. So delegated proof of stake for Cosmos. So all of this blockchain will basically have the consensus mechanism because of Tendermint. So right, guys. So with share staking application, like let's say for example Thorchain, they do not care about having their own blockchain. They can just deploy the app, and Cosmos Hub will have its own validator set that will help Thorchain basically secure the blockchain. So yeah, this is how the Cosmos work. Another issue previously we had with Cosmos, I apologize in advance if you can't see this graph. Let me kind of zoom in for you guys. One of the reasons why market didn't like Cosmos was because there wasn't value accrual to the token, and because of inflation the value accrual was actually getting diluted. Because Cosmos has been one of the OGs of crypto, they just wanted to build, and they didn't work on the tokenomics that much. But I think it's changing now, and I think market will start to realize this, and this can moon. Not financial advice. So the reason why it can moon is the token utility of Atom has started to pop up. So you have Cosmos Hub. So let's say if one chain transfers to another chain, like token, message, what have you, Cosmos Hub will take value through transaction fees. Great. Then you have the shared security, which I mentioned. This is very similar to Polkadot. So those two projects that, let's say, do not have the enough resources to secure the chain, they can ask Cosmos Hub to kind of help them with security, and they'll either airdrop their tokens or they'll give them fees. So that's another way Atom token holders will be able to accrue value. And final thing is, within this Cosmos Hub, you'll have Gravity Dex, which the Gravity Dex will have Atom in their forefront, and some of the transaction fees will accrue to Atom stakeholders. So this is like part A. In part B, I'm gonna give you my investment thesis, some of the concerns, some of the valuation analysis. But I think that I'll do that for next week. I also have Mr. Peng coming up tomorrow for podcast. So guys, if you have any questions, just post it down below, or subscribe to Token Metrics and just hit me up on Telegram. And any of those channel works. But I would appreciate if you kind of subscribe to Token Metrics. That's how we earn our salary. So yeah, guys, thank you, and do let me know. I'll have Mr. Peng, who is the CEO of Tendermint and one of the core contributors to Cosmos, if you want to learn anything new.
Fantastic. Thanks, Mehdi. All right. So as we near the end of our stream today, we've got Crypto Showdown. All right. Let's go to Crypto Showdown. We've got Avalanche, Terra Luna, and Near Protocol. Mehdi, while you're still fresh on the mic, what's your pick for the top altcoin in December? You want to be an AVAX, Luna, or Near?
AVAX for me at the moment. Although I like all three of them, not gonna lie, but AVAX for me in December. Institutions are very bullish.
Very nice. And Bill, what's your take?
Okay, well, I think, obviously AVAX is going to go, but maybe the surprise shocker could be Near, right? In other words, AVAX is going to lead, but I'm kind of wondering if some of these other smaller ones can also follow. So I think the clear choice may be AVAX, but I'll go with Near only because I know people like it and it hasn't moved. It hasn't really moved the way people thought it could.
All right. And I guess I'll round it out by saying I'm going to go with Terra Luna. Obviously, AVAX and Near Protocol, fantastic layer ones, fantastic projects. And obviously, AVAX has been crushing it lately. However, I'm going to go with Terra Luna because, my strategy when it comes to my personal strategy when it comes to if I miss the boat on something, that's okay. I'll just trade it. And Terra Luna has been following margin pressure levels very, very nicely, very neatly. Nice, neat 33% corrections followed by 100% pumps, which have been very, very rewarding recently. So I'm going to go with Terra Luna, but let's see what the audience thinks. And the winner is, I knew it would be AVAX. AVAX wins top altcoin pick for December. All right. Now we've got a little bit of Q&A. I'm going to stop sharing my screen and we're just going to roll through the Q&A, and Mehdi and Bill, feel free to chip in if you have anything to offer here on any answers. All right. So we've got the first question. Any new projects that you have your eyes on? I'm talking about like the Graph protocol or Flow. So any new projects that we have our eyes on? Not a new project. I'm keeping a close eye personally on the development of IOTA. They have staking coming out soon, and I think that's going to be a big catalyst. Now, we've kind of done a bit of a dive into it, led by Mehdi, and there does seem to be a few potential, I won't say issues, but vulnerabilities in the consensus mechanism. And if they can deliver, if IOTA can deliver on their vision, I think it'll be valued much, many multiples higher than what it's currently valued at. The key word or the key caveat is if they can deliver. But they do have staking coming up, and I think that'll be a catalyst in the short term. So kind of an oldie but a goodie there. Any projects you guys are watching out for?
Sorry, I'll go. Bill, you want to go first?
No, go.
Yeah, so I'll mention some low cap, which I personally invested in, although this is not financial advice, and I'm having a close look at. Is one of them is Sidus. I think Sidus has a very interesting gameplay, and it has a very interesting dual token economy. Another gaming project is Solchix. I personally invested in. I think 1.2 billion valuation at the moment is still kind of cheap for that game. Apart from that, few other metaverses I'm looking forward towards is Lunaverse and Pax World. So those are two upcoming emerging metaverses that haven't launched yet, and I think they could do well. In audience, we have this question about Block and Gala. So those were amazing projects if you were able to get it on private sales. But at the moment, the valuation is very high. I think both of them have valuation of north of 25 billion, which to me kind of suggests that you might not have the crazy 10 to 100x potential. So that's the reason why I'm a bit skeptical of it mooning anytime soon.
All right, for me, I'm looking at, people have been mentioning it. I've been looking at Casper, right? It came up, tax loss selling is a big thing because of how much it crashed, but 12 cents held. And I'm really interested in small cap smart contract platforms. Why? Well, Mehdi just told you that Cosmos and the Polkadots of the world can connect a lot of different layer ones or a lot of other blockchains. So what if Casper, which has been destroyed, comes back along with other small cap layer ones, right? I noticed like Dusk Network on tokenmetrics.com also had a really nice pop, and ticker symbol NULS, right? Smaller cap layer ones could start moving. Also, on the bigger side, I'm looking at FTT, FTX's token. Kind of really interesting how no one's interested, right? No one is interested. And when is the best time to be interested? When no one is interested, or when no one understands it, which is why, when Mehdi tells you, the internet of blockchains or blockchains all connected together, yeah, that's hard to understand. Well, actually not anymore, because Mehdi explained it to you, right? But stuff that's hard to understand can become great investment narratives, because when the light comes on for everybody else, that's when you get price appreciation. So small cap layer ones, underappreciated layer zeros, and how about an exchange token? Because if crypto gets hot again, that could be a theme. So back to the Q&A. Uh-oh, Forrest, I think you're on mute.
There we go. All right, so the next question is a good one. Hey guys, how do you see the moment of the flippening playing out? Could it mark a local top? Will ETH reject it and capitulate? Will it go parabolic? Thanks. So assuming Ethereum flips Bitcoin, what will happen next? Will Ethereum just continue to rally and go parabolic off of that type of news? Or will it capitulate? Honestly, I think that initially it'll probably mark somewhat close of a local top. That's just my opinion. Obviously, I can't predict the future. The reason being is that for Ethereum to flip Bitcoin, it has to appreciate a lot while either Bitcoin goes down, stays still, or goes up by a lesser amount. So the first point at which Ethereum flips Bitcoin in the shorter term will probably be a point at which ETH, in terms of price action, is a little bit overextended, and Bitcoin, in terms of price action, is not so overextended. So that could lead to a kind of a short-term top, maybe some sort of corrective action. And then I would expect ETH to continue to grow faster than Bitcoin and kind of flip it again, if that makes sense. That's just my prediction. Mehdi, Bill, any thoughts?
Yeah,
I think go on, Bill.
So, I think to get a flip, you would need something like, it would have to happen in stages. Like it would probably be Bitcoin down, perhaps, and then the dollar goes down, and that's when ETH takes off. So it would have to happen in stages. My guess is somewhere in there, an unpredictable event would have to occur. Personally, I would love it if the dollar just crashed and that sent ETH throttling higher. Somebody was asking, what's the value proposition of ETH with the high gas fees? I think you got to remember, when it comes to ETH, just as an aside, ETH is both money, the currency of culture, and it's like a tech stock. Take a look at the tape today, December 16th. ETH up, FANG down. So ETH is like money and tech, right? Bitcoin is kind of just money. Now, not just any money. It's good money, but you have to remember, there's going to be a flippening. There's going to be some bizarre events in there. Mehdi, over to you.
Yeah, I think flippening will happen. I don't have the time frame. Timing the flippening will actually mean timing the cycle, which is very, very tough. I'm actually looking forward to the second order effect of the flipping. So for me, interesting element and interesting narrative will be, imagine if Ethereum flips Bitcoin, but then imagine there is a narrative that Ethereum will be flipped by other killer layer ones, and perhaps layer zero. So for me, that will be a very interesting theme, and that will basically make a lot of people a lot of money. So rather than just focusing on the flipping between ETH and Bitcoin, which can give you 100% return, if you kind of look at the second order, third order effect of layer one, other layer ones, other layer zeros, other layer twos, I think you can make a lot of more money. So that's the theme I would be more focused on if that happened.
All right, that's gonna round it out for Q&A. Bill, do you wanna sign us off?
Sure. Okay, friends. First of all, I want to begin by thanking Forrest and Mehdi. Analysis does not appear by itself, and I know these gentlemen work very hard to bring you stuff that you will not find anywhere else on YouTube. So please like and subscribe to our channel. Somebody was asking if Mehdi's work is available in Token Metrics newsletters. You bet it is. Our professional plan webinars are practically blockchain master degree classes. So you want to check that out, as well as liking and subscribing to our channel. We can give you professional analysis. We can be friendly, funny, affable, smart, and most of all, intellectually honest. So folks, stay with Token Metrics. Stay with us. That's it for the Thursday live stream. I'm Bill Noble. I will see you tomorrow.